What's going on, everybody? Welcome back to Millennial Traders. Today I'll be telling you about candlestick patterns and the ones that you should be honestly worried about. Now when it comes to my trading, I only focus on really just two sets of candle formations. That's going to be sell to buy candle and a buy to sell candle. And basically I only use those things for the formations or the entries that I like to do when I'm getting into a trade. So I'm going to be showing you a couple setups of the candle formations of what I'm talking about. There are some candle formations that kind of tell you what the market is doing and stuff like that, but that's most of the time for manipulation, because as you know, the market wants to take your money and not let you make money. So that's the honest truth about it. So just having that in your head and mind, just know that you can't trust all candle formations and stuff like that. So without further ado, let's go and get this video started. Okay, so this is a pretty blank chart. I went back, I wasn't trading S&P 500 a lot, for the past year. I've only recently started to trade it back again. So the first thing I like to do is mark the highs and the lows of the days. We'll definitely get into the candlestick formation patterns, but they're basically self-explanatory. Just mark the highs and the lows of the days and stuff like that, because I'm trying to find an entry too. I just don't want to be the candle formation guy nowhere or whatever like that. So we got this area right here. We got two buys and sells. There is a level, there's a buy to sell candle right here where I can get in at. They also show you where the buy and sell candles and sell and buy candles also show you where the supply and demand levels are, especially if that whole move on a higher time frame broke structure. So I'm going to be going over that too. Okay, so this is pretty clear right here. There's definitely some zones that I want to mark up. So I do want to mark up this one. This was the high of the day. But I do like that area right there, and I like this area right here. It's on the 15 minute. Let's go down to the 3 minute, because I'm going to refine these a little bit better. So my whole thing is I'm going to be making an entry on a sell to buy or buy to sell candle. Okay, let's do the 5 minute. Okay, they'll let us do the 5 minute. Okay, so I'm waiting for an entry. An entry was already made on New York session. It actually hit it right there, so we're gonna go actually use this one. It entered our zone and it entered a buy to sell candle. That's the type of formation we want to get on. I want to make my stop loss no more than 30 pips, and if it's 30 pips, it's going to be just a little above the zone that I highlighted first, right? So we're going for at least a 1 to 2. You can see that we just demolished that one. All right, so that was just one example. I'm gonna fast forward this thing so I can show you guys another example. All right, so here we got another example, right? It's trading deeper in the zone now. I want to know if this is okay. So this is Asian session that's marked in red, so I don't trade that. I trade mostly the end of London and the beginning of New York. So we're just gonna let it do its thing. Taking out liquidity, marking new highs, extra risky. We're gonna be just waiting for, okay, we're gonna be waiting for a good setup. So you saw that dip, right? That major dip. All right, something happened there. We're gonna see if we're gonna get some type of reaction the next day, okay? We just gotta be patient on these setups and just let the trade come to us. Okay, ooh. All right, I had to pause it right there, okay? So look, it entered our zone, right? It entered our zone all the way down right there. We're gonna go on the 5 minute, because it wouldn't let us go on the 3, so we're gonna be entering off of that sell to buy candle, since that's the first candle formation that entered our zone. And we're just gonna go for a simple 1 to 2. All right, and it definitely hit that. Like I can't make this up. Like once it hits your zone and stuff like that, just make sure, you know, you take the precautions to actually take that trade. So that's why I say the candle formations are super important. I'm about to go give y'all one example of why candlestick formations can actually trip you up. They'll even trip me up. But once you start doing stuff repeatedly and consistently over a period amount of time and stuff like that, it'll get easier for you to actually see these moves and actually participate in them. So I'm going to show you that one example, okay? Okay, so for this one that I am going to circle right here in green, right there, that is a super rejection candle. Like you see it's rejecting a lot, so 9 times out of 10 it'll definitely tell you that you know, the market is about to go down. But how I can, you know, kind of mitigate those areas of improbability is by checking on the time of the day of what's going on, right? So this is the end or around the end of New York session. So when you see this right here, you'll see that, hey, this is not a good time to trade. If it was a good time to trade and it was going to be going down, then it would have been happening a little bit earlier, right? So I'm gonna fast forward this, and you can see that during Asian session, it just stop punched you out and hit your stop loss, and then still continued to move up. So that's what I'm talking about. We gotta be careful and stuff like that, because that's a big reversal. But I hope you guys really got a understanding of the candle formations that I use. They work for me, and I know they'll work for you just by like looking at it, because all the other candles, they do tell you what's going on with the market and stuff like that, but you gotta be wary of the time and whatnot. So I hope you guys had a ton of value from this video. Check out my playlist for more. I have a ton of content that's coming out, and I'll see you guys next time. Peace.